not to go after some of those infrastructure stocks at this point. Did I hear you correctly?
Yeah, well, I said that if you're really going to play that game, and it is a game, be aware that it's been a mug's game for many years. So own stuff that can, on its own volition, do well. Nucor's putting through price increases. They've got demand for every single line of their steel, so I'm cool with that. Same thing with Martin Marietta Materials. They are only in growth areas of the country. That is one that you want to buy if you believe in it, because they'll do well away from that. So what I'm trying to do is make it so that there's kind of a fail-safe, because we have historically been really bad at the so-called shovel-ready projects, bridge and tunnel. It's just not what we're good at. At one point, we were a great country about that, but let's just own that is not our strength anymore. So I'm reluctant to play that particular group of stocks. I know, and I defer because I do spend a lot of time talking to Steph because we have many, many years. But I saw URI down 4 today after reversing. I said, well, okay, listen, if you really got to be there, then go with United Rentals. And by the way, can I just say we are in a halcyon moment for the semis. Micron reports today. I do think the DRAM's tightening. But Gary Dickerson is running Applied Materials. He is fantastic. Tim Archer running Lam Research. You know, Judge, we don't talk about the fact that sometimes the CEOs, Lisa Su at AMD, now Intel has a great CEO. It is just a halcyon time. I've never seen all of these semis be run by such competitive, good CEOs.
Yeah, and a lot of the stocks reflect that leadership as well.
Yes.
And the kind that you speak about often. Yeah. You know, Steph, I find it interesting, right? We've talked so often, and we try and give advice to our viewers about this whole barbell approach that we've heard about from you and others for so long. And I'm wondering now, because we're thinking more about the reopen and the recovery, whether the barbell at this point has to have much more weight on one side than a more balanced way that it has up until this point. Can you speak to that at all? Does that make any sense?
Yeah, no, I do. I mean, I actually am now 70% cyclicals and 30% kind of quality long-term growth. And a lot of that is because of what I said earlier, that I think all this stimulus sloshing around and we're going to get more. We haven't even spent all of it yet. It takes a long time to get into the system. It takes almost a year to get into the system. And so I think we're starting to see the benefits. We're starting to see better growth. To Jim's point before, I've been talking about 10% GDP growth for weeks and quarters now because of all this pent-up demand. And so I think all this pent-up demand is going to be substantial and lead to better growth, better earnings. And you want to have companies that have exposure to that, economically sensitive companies where the margins have held up, but the revenues have come down, but they're so well run and they've restructured ad nauseum that they will see positive operating leverage as you see better demand on the top line. I think these companies, particularly in the industrials and the financials, I think they've done an amazing job hanging in there up until now, and I think this is their year. And so you want to have more exposure on those groups, including materials as well as also consumer discretionary. But I'm not giving up on Google. And in fact, I've been adding to that name. I'm not giving up on some of my technology names. I happen to be more semiconductor centric in terms of my tech holdings. But I think that there are definitely opportunities along the way. So you do want to have a balance.
Well,
Maybe a little less of a balance.
You say you're not giving up on Google. Well, you know, rightfully so, because, you know, Google is very much a reopening story, if ever a FANG stock could be one. But you know, Jim, what do you do then with the, you know, to Steph's point about cyclicals and, you know, industrials or discretionary, Boeing, American Airlines, and Delta United, all of the airlines which quarter to date have obviously had huge runs, and even month to date. And if we're talking about this, maybe more weight going towards those types of stocks, do you continue to buy those?
Well, we have this guy, Philip Bowe. Okay, I think he knows these airlines better than the CEOs of the airlines. He's probably like the clearinghouse. I mean, if I was Ed Bastian, I'd be calling him and saying, what's American doing? And he came on this morning and talked about raising rates. And by the way, not with a lot, you know, just total leverage. I mean, it's very rare that you have this kind of leverage for these airlines. So the answer is yes. And by the way, in this Boeing, people were saying to me, hey, listen, Ned Siegel was on last night with one of these things, places on Twitter. And he was saying, do you think that it's just kind of one of these fall in line Boeing things where first the day one you get Southwest, then day two you get Alaska, tomorrow you get... No, Southwest got this great deal. And now all these airlines are coming in and saying, we want that deal. So I think Boeing works. I think Boeing goes higher. I think Boeing's in much better shape than people realize. And as long as I listen to Phil, you got to own these stocks.